Tesla's down 3% again today, but something very different about today, which we have not seen before in the past couple of weeks, is that for the second session in a row, the BX Trender has shown higher lows. Now, the BX Trender showing higher lows in general does not necessarily mean that we need to bounce. And in yesterday's video, which I highly recommend you go back and watch, we did a 20-minute deep dive on Tesla and how I think things will pan out for 2025. But the main reason that this bounce and support area is so different and such an area of interest is because it is sitting at the smart money zone. If we look at our most recent swing low of $182 up to our most recent swing high of $441, the 0.786 and the 0.826 are called the smart money zone. Now, within our smart money course, which you can take for free down in the description, I show you how to draw those and set them up in less than 30 minutes. And these areas of interest are so important because it is going to be the absolute lowest where institutions are normally going to allow a stock to pull back to before they step in. The reason for this is because one, structure is still bullish. We did a full structure breakdown in yesterday's video, but because we're still making higher lows and higher highs, even with this massive pullback from basically 450 down to $240, a 50% haircut, structure is still bullish. Now, this area is so important because it's trading at such a discount. You have to understand that institutions do not trade the way that everyday retail traders do. They are never going to overpay for anything because this is going to show us the buying pressure and the Fibonacci's are going to show us the structure. And what we want in a perfect world is structure to be bullish just like this, but we really want price to be trading in a discounted range. They are detached and they are only going to buy at discounted ranges. And this is why we use the Fibonacci so much. And more importantly, why we use the BX Trender. Now, if you're somebody who's a long-term investor, of course, you don't want this sell-off to happen that's been going on recently. But if you are somebody who is a trader, you want this because we are not going to buy when price is trading near all-time highs. And institutions are not going to buy when it's trading at all-time highs. Unfortunately, most of the time, the people who are going to buy is going to be everyday retail traders, investors, and unfortunately, sometimes those who are normally late to the party trying to time things. Now, yes, I did start buying a small amount, around $300, because I thought that $300 was going to hold. And as of right now, I am down about 60% on that position. But you will see that while it's a big number relative to the profits that we've made on Tesla alone, just basically since June of 2024, it's a small amount of capital. There's no reason that we should be chasing with a ton of money up around $400 or $350. That market bias was a great area for a potential bounce, but that's why we didn't go hard and start averaging down. Now, I'm still holding capital to average down on my 2026 and 2025 calls, but in order for that to happen, I just can't say that price is trading at a discount, so we're going to buy. Instead, we need confirmation. I'm not going to burn any more capital, even though I still think there's a chance that this is going to bounce and could close at $400 to maybe even $500 by the end of the summer. So before I go throwing any more money into this, I need that BX to make a higher low, and we covered that in yesterday's video. In yesterday's video, we talked about how the smart money zone was very important, but what was more important is that we are no longer making lower lows on this BX trender, but instead higher lows. Now, if you want to get access to all my indicators and our exact entry and exit requirements to our trading strategy, then go check out the Elite Traders Playbook. It's completely free. We'll get you set up with our charts in less than 20 minutes. This is normally a sign that buyers are stepping in, and we know that buyers are normally going to step in at this smart money zone specifically. Now, what's different is that price has actually pulled back today. I thought price was just going to continue to run up to maybe $280 or $300, and that the gap we had from yesterday's session off of CPI would most likely be filled in the coming weeks. But instead, price actually pulled back, filled that gap. And something that's very important here is that the BX trender once again did not make lower lows, but instead made higher lows. And this is an indication, of course, not that the bottom is in, but that selling pressure is weakening. If you are somebody who wanted to be aggressive here, then this is the first sign, and we could end up trying to time this entry. If we got in today at $240, we would want to set a stop loss either when the BX makes lower highs or lower lows, or we could put a hard stop loss at price action, making lower lows. So let's just say an 11% downside. Short term, the upside here is about $280 to $300, which would give us anywhere between a 2-to-1 risk versus reward. Now, honestly, even with a 2-to-1 risk versus reward, you can only be right 50% of the time, and you're going to make more than enough money, not today, but over your career. I actually posted about this today, and I wanted to cover this briefly because I think that this is something that I don't really talk about too much in these videos. It's an aspect of the trading world that I don't see many influencers talk about. And so I posted saying that today doesn't matter, not because we're holding trades for 5 to 10 years, but because we're thinking 5 to 10 years out. And if you've got a family to support, that is even worse. The right mindset requires control. I tell you guys this all of the time. Every trade, every position is just a small piece of a bigger game. If you're trading with money you need soon, then you're adding unnecessary risk. And so when you're able to stop stressing over today and what is happening today, it's easier to have a clearer head. And then when you have a clearer head, you're going to make better decisions. And over time, that is actually what wins. But the problem is that it is so hard for so many people to keep a clear head. And I'll be honest with you, it's even hard for me at times because I don't just have to worry about myself at this point in my career. I have to worry about you guys. I have to worry about my reputation. But at the end of the day, what keeps me so rooted and what I believe makes me a professional is the fact that I'm not worried about what I'm doing with this capital today. If you are trading or investing with money that you will need in the next 3 to 5 years, then you need to stop because you will be too emotional in the market and it will only lead to the worst possible decision making known to man. And so if you want to remain calm, then you need to be detached from the money. And in order to be detached from the money, you have to make sure that you don't need it soon, because then you'll be able to play your strategy out to perfection and think like a professional. You have to understand that hedge fund managers don't need the money that's in the fund to pay their bills this month, which is why they can think so clearly and act with such rationality. Now, going back to this trade with Tesla, 2-to-1 risk versus reward here is pretty damn solid. And you have to understand, if we're thinking clearly here and we remove all of the pain that's been happening in the past couple of weeks, structure is still bullish. And if this bounce could happen, then that means the weekly BX would eventually flip. And for those of you who know or have taken any of my courses, this weekly BX trender, when/if it flips to a higher low, more importantly, confirms and closes with a higher low, then we have with pretty high certainty about a 75% chance that price is going to move its way back up into equal or higher highs. So anything right now is most certainly premature. It doesn't mean that it's not worth the potential risk. But if I was somebody who was focusing more on capital conservation right now and trying to have the best chance of a bottom actually being in, then I would wait for the BX to make a higher low. Unfortunately, the earliest that would happen would probably be next Friday. Thank you guys for all of the support. Make sure to check out all of our courses. The link to all 11 of them will be down in the description. And if you are somebody who's been trading for at least 1 year and you want access to all of my real-time trades, all of our trading bots, live stream with me each and every single day, then go ahead and join our Discord community. The link will be in the description, and you can use the code BX50 to start for 50% off your first month. Thanks for all the support. I'll see you guys tomorrow.